Hello everyone, welcome to the ichimoku daily analysis for gold for Wednesday, May 22nd, 2013. Well, the uptrend here in this market technically continues. Previous candle we had a candle with a higher high and a higher low, establishing that first time uptrend. The candle for today's trading, we've taken out the high of the previous candle, but also taken out the low. Therefore, we don't have the opposite configuration of a trend, so the previous trend remains in existence, and that was to the upside. Having said that, however, quite a bearish candle. If we look at this very large shadow on the top of this candle, we saw the market attempt to trade above the 1400 round number level of resistance and be strongly rejected from there. And for the past 1, 2, 3, 4 and now 5 candles, we've seen the market test to around that 1400 level, and for the sellers to come in strongly for nearly all of those days except for this bullish candle here. So for today's trading, a very large amount of strong price rejection, and this does suggest that the market may test to lower levels. A very small black body on this candle, however, so we haven't seen extension of the size of that black body from the previous day's trading. So that does raise some doubt about continuation of the trend to the downside. But we have seen the market close down between the midpoint level and the low, suggesting that the sellers have taken control, not strong control, but they have taken control, whereas the control that they had for the previous day's trading was quite weak. So that does suggest potential to trade to lower levels. Looking at the shadow on the bottom of this candle, we have seen buying once again come in around this 1360 level, and that's for the fourth consecutive day we've seen some price rejection from there, and the sellers lose commitment around that area. So moving forward for today's trading as it's developing, that will be an important area if the market is going to trade to lower levels. Now, if we do end up trading to lower levels, very solid support at 1329, an area where the market was strongly rejected from after that very strong sell-off that we saw. So that is an important level for this market. Also down below there we have strong support at 1309, and then the round number 1300 comes into play as well, so very solid support below. But by the same token, if we do see this market rally, solid resistance overhead around this 1400 area. We have the Ichimoku indicators roughly within a zone around there, plus or minus 10 points, so very strong overhead resistance. Now, in terms of Fibonacci, this market is technically still in an uptrend, so we're looking at the relationship of the current first time frame uptrend to the previous time the market's trending up. And here today, once again, for the second consecutive day, we saw strong price rejection from above the 161.8% level, and that's significant with the sellers taking control. It does suggest a good possibility of this trend technically changing to the downside. In terms of the Fibonacci retracement, here today we've seen strong price rejection from just above the 50% level with the sellers taking control, suggesting that there is good potential for this trend to change, and what we're looking for is follow through down through the low of the current candle to establish a lower high and a lower low. Now, in terms of Ichimoku, a bearish market in all three timeframes. This market is trading down below the clouds, so we have a bearish bias in the long-term timeframe, and the market's also trading below the Kijun-sen and the Tenkan-sen, so bearish in the medium and fast-term timeframe. Looking at the checkout span, that's just below the corresponding price action, so technically just confirming the bearishness that we're seeing, but not giving us a lot of confidence in what we're seeing with the Ichimoku indicators, because we are trading, or the Chiká span is trading very close to the price action. Just looking at the Kijun-sen and Tenkan-sen, that held as resistance to this market for today's trading, and we saw the market strongly rejected from there. So for tomorrow's trading, if the market does rally, or over the next few days if we do rally, that area should hold as very solid resistance, as I've already mentioned. So basically a bearish market in all three timeframes. We are seeing some congestion, and the market finding a very solid barrier at the 1400 level. That is a very important level. If we are going to breach that, we will need to see some solid buying coming into this market, but very solid support down below around 1329 down to 1300. Really not a market that's a good trading market at the moment. We want to see resolution either above the 1400 level, and then a potential for the market to trade up to around the 1462 level, or a breakout down below these solid levels below around this 1329 down to 1300 level.